All right, if you've been keeping an eye on the crypto markets, you know it's been, well, a pretty brutal ride lately. So today, we're going to cut through all that noise. We'll break down exactly why prices are tanking, and more importantly, what you need to be looking for next. Let's just dive right in. Yeah, this is the big one, isn't it? The question that's on literally every crypto investor's mind right now. I mean, after hitting those insane highs, the market has just taken a nosedive. So let's get into the key data and figure out what's really going on behind the scenes. And to really put this into perspective, we're talking about the entire market getting sliced pretty much in half, down almost 50% from its recent peak. Look, this isn't just some small correction or a little dip. This is a major event. So what's the #1 culprit behind this freefall? Well, the main story here really boils down to just one word: exodus, a massive outflow of capital. And when money starts leaving the market like this, it's pretty much the clearest signal of trouble you can get. And how much are we talking? A staggering $3.8 billion. And that's just from the US spot Bitcoin ETFs alone. You got to think of these ETFs as the superhighway for big institutional money to get into crypto. So when that much cash suddenly makes a U-turn and heads for the exit, yeah, the entire market is going to feel that shockwave. And look, this isn't just a one-day blip or a bad week. Nope, we're looking at 5 consecutive weeks of money pouring out of these funds. A sustained trend like that, it creates this constant, grinding selling pressure, and it signals a really deep shift in investor mood, from all-out confidence to serious caution. So what does that actually do to the market? Well, it sets off a kind of chain reaction. First, super simple. Less demand means lower prices. Second, all that money rushing for the doors creates these wild, unpredictable price swings, major volatility. And third, and this is a big one, it spooks the big institutional players. They get scared to invest, which, you guessed it, just makes the whole situation worse. Okay, so with all this selling going on, it naturally leads us to the next massive question, right? Are we anywhere near the end of this? Is the bottom in sight? To figure that out, let's take a look at what the technical charts are telling us about trying to find that market floor. So have we finally hit the bottom? I mean, that's the million-dollar question, or maybe billion-dollar question at this point. To even begin to answer that, analysts are all looking for one very specific, very dramatic signal. And that signal is called capitulation. It's a dramatic word, and for good reason. Put simply, it's the moment when investors just give up. They throw in the towel. They panic sell everything they own, usually at a loss, and the market gets hit with this huge, final, climactic wave of selling. It is, without a doubt, the point of maximum pain.
Here's the thing, though. That's not what we're seeing right now. Instead of that one big, dramatic, panic-selling event, what we have is more like a slow bleed. Just this gradual, grinding, painful decline. The market is completely missing that classic, explosive sign of hitting rock bottom. And that's worrying, because it means this slide could definitely continue.
And on top of that, we're seeing key price levels, these really important lines in the sand, being tested. Bitcoin is in a real fight to hold on to that 68,250 mark, and Ether is battling to stay above 2,000. And as you can see, it's not just them. Other major assets are feeling some serious heat. Now, if these support levels break, well, we could be in for another pretty significant leg down. So, okay, the charts look pretty grim, I get it. But the story isn't quite that simple. The market is always a battlefield of ideas, right? And right now, there's some really powerful arguments on both sides of the fence, from the super optimistic to the, well, not so optimistic. Let's start with the bull case. On the optimistic side, we've got a huge player from the world of traditional finance, the CME Group, stepping up in a big way. They're planning to roll out 24/7 trading for crypto. Now, this is a huge deal. Why? Because it means more money can flow into the market any time of day, making it way easier for those large institutions to get involved. But then, on the complete opposite end of the spectrum, you have the powerful voice of economist Nouriel Roubini. You probably know him as Dr. Doom. And he is doubling down on his classic critique, saying Bitcoin has no real fundamental value and is a major risk to the entire financial system. You couldn't get a sharper contrast in opinions, and it just goes to show you how divided the experts really are. So with all this conflicting info flying around, what should you actually be paying attention to? Let's break it down. Here are the key signals that are going to tell us where this market is probably headed next. First things first, you've got to keep a close eye on market sentiment. And right now, the Fear and Greed Index, it's screaming extreme fear. Now, what does that mean?
Historically, when fear gets this high, the market doesn't just bounce back. It tends to just go sideways for a while. It needs time to heal and build back some confidence before any kind of real recovery can even begin.
Okay, so grab a pen or just lock this in. Here are the 4 key things to watch. Number 1, do those massive ETF outflows finally slow down? Or even better, do they start to reverse? Number 2, can Bitcoin and Ether hold those critical price floors we talked about? Number 3, how does crypto react to the next big piece of economic news? Does it shrug it off or panic? And finally, number 4, are the big money investors starting to place bets that prices are going to go up again? The answers to these 4 questions, they're going to tell you pretty much everything you need to know. And this all boils down to the one final critical question. Is what we're seeing right now just a healthy market reset, a necessary cool down before the next big bull run? Or is this the beginning of a new, long, and cold crypto winter? The signals we've just covered, that's where you're going to find the answer. Thanks for joining us for this explainer.